situation get worse on the rupee and the markets after the September policy? Or has the market priced that in already so we can be prepared for a post-policy rebound?
I think the market has anticipated much of it and the rupee has overreacted. It's increasing the relative competitiveness of India, but it's still a domestic demand-related economy, so exports aren't a big part of it. So I think you'll continue to get some volatility. My guess, however, is with the new central banker, Mr. Rajan, plus the government starting to decrease its populism and start increasing, obviously, this move towards more liberalization and reform, we'll start to see better news out of the Indian market. Technically, it's oversold, so we should get a bounce anyways, and I think that's what we've been seeing the last couple days.
India has worked hard to avert a ratings downgrade. Is that inevitable in the scenario? What will be the impact of that?
No, I don't think it's inevitable. I think there's a lot of confidence in the foreign community in the RBI, the Reserve Bank of India. We'll wait and see, but it seems like the new head is a very capable economist, understands the business extremely well, good macro, and obviously understands the industries and micro well, and knows what they've got to do, knows what he has to do. So I think I think the re-rating will wait, the de-rating will wait until there's we see the RBI falter, or we see the populism rear its ugly head and again, and reform and liberalization slow down.
What do you expect on the rupee against the dollar? Is 70 or above possible?
No, I think we've stabilized on the currency. I think you've probed the depths. Currencies have a tendency to overreact to the downside as well as to the upside, and I think the rupee has been a case in point. I think the most FX short-term traders and the longer-term funds will start to, or long-term horizon funds will start to focus more on buying here at this level. It looks like it should be set up for a technical bounce. That's not to say it might plunge a little bit more, but in my mind, I think technically we're at a pretty good level here, and it should hold.
Do you believe 2014 will be good for India and emerging markets in terms of what will drive interests?
Yeah, I do. You know, you got to step back a little bit in terms of overall asset allocation and look at those big level 1 or tier 1 decisions. I think 2014 going into 2015 will be quite good for equities in general. So we'll see that massive rotation away from fixed income as yields start to normalize back into equities. We still have fairly modest non-inflationary growth around the world. Things are recovering. We should see a pickup in profits. You should see a pickup in exports and domestic demand in general. And I think that's going to behoove or benefit the emerging markets. India will, of course, catch a bid on the back of that. So all of this is being set up for a really good buying opportunity. The problem is, how do you stomach the volatility short term? And does it look like the rupee and the Nifty or the Sensex are in free fall? And I would argue they're not. I think we're plumbing along, we're bouncing along a bottom here.
What is your growth expectation from India for this year?
Well, you know, it's a tough one. You know, I think we just have to manage down our expectations for emerging markets in general. That not just India, but also China. I think they're big economies, and they're going to go into a period of slower but still very good relative growth. So 4.5% to 5% GDP growth, maybe 5.5% to 6% in China, and as a result, we have to expect less from the economies that are much bigger. However, that said, on a relative basis, they will stack up still quite nicely against the developed markets. Will they sustain a critical growth path enough to justify and to continue to absorb their population? And India in particular, that remains to be seen, but I think China, 5.5% to 6% should be pretty stable.